Welcome to the Economist in Your Ear podcast. Have you ever wondered if even the most successful aspirational brands are truly immune to the ever-shifting tides of fashion and global economics, or if their biggest challenges lie in places we least expect? Today, we're looking at a fascinating piece from The Economist. It asks how Lululemon fell out of fashion. And it paints this vivid picture, the athleisure giant losing its footing.
Yeah, suggesting this dramatic farewell to figure-hugging leggings because baggy fits are in.
Exactly. It frames Lululemon as kind of struggling to stay cool.
But you might think it's all about fashion trends, right? What our exploration suggests is, well, a more profound truth, actually.
Right.
Like their biggest challenges, they aren't just hemlines or how tight a legging is. I mean, that's part of it, sure. But they really stem from sort of the invisible hand of policy shifts, unexpected tariffs.
Things the article maybe doesn't dig into as much.
Exactly. And the changing digital commerce landscape, too. The article, well, it barely scratches the surface there. So we're going to pull back that curtain a bit, unpack the arguments, see where it hits the mark, and also challenge some assumptions, get a more, nuanced picture.
Okay, let's unpack this then. The Economist article definitely captures a sense of Lululemon losing some of that market edge. It points to some headwinds that are genuinely undeniable. What are those immediate visible pressures?
That's right. And there are several you just can't ignore. First, the fashion headwinds are absolutely real. No question.
Right.
We're seeing a pretty significant, almost dramatic silhouette shift in what people are choosing.
Like the move away from skinny fits.
Precisely. Retailers' investment in skinny, it dropped by a whopping 69% between 2021 and 2025. And, places like the Wall Street Journal, Business of Fashion, they've been tracking this go looser pivot all year.
So it's not just a fad.
Not at all. And for a brand like Lululemon, so known for those compressive leggings, well, the shift is a direct hit, a real challenge to their core product.
So it's not just what people are buying, but maybe why and who's influencing those choices. The market feels noisier now.
Exactly. The article correctly flags what we could call a competitive sizzle. You look at a rival like On.
The wedding brand?
Yeah. They're using a really savvy pop culture playbook, getting partnerships with huge names like Zendaya. She brings massive cultural cachet, right?
It's a huge following.
And then they collaborate with high fashion labels like LOEWE. That instantly elevates them beyond just sportswear. It creates this significant buzz.
A buzz that Lululemon finds harder to generate.
Well, their model has always been more low-spend, word of mouth, and that struggles to match this kind of high-profile noise, especially now. It even has real effects. Lululemon's U.S. store visits were trending lower in Q2.
Okay, and then there's the whole dupe thing. You can't scroll social media without seeing them. How does that, plus the economy, factor in?
Yeah. Oh, absolutely. Price and copycat pressure are major forces, and The Economist nails this, the rise of dupe culture. It's no joke.
That Costco lawsuit comes to mind.
Exactly. Lululemon suing Costco for selling cheaper versions of their styles. It just shows how easily popular designs get copied. And this really bites when you have aspirational pricing meeting, tighter consumer wallets.
Which is happening now with inflation.
Right. The article flags this economic backdrop, too. Lululemon's own CEO, Calvin McDonald, warned that American shoppers and their, 3/4 of their revenue are getting more cautious.
Which hits willingness to spend on premium gear.
Directly.
So when people are cautious, sales slow, and then inventory piles up. That's the classic retail trap, isn't it? Leading to sales.
This is where the article is absolutely spot on. Inventory and promotions are a critical battleground right now.
How bad is it?
We'll look at the numbers.
Yeah.
Q1 2025. Inventories jumped 23% year on year. Sales only rose 7%. That gap creates huge pressure.
To move the stock.
Precisely. And analysts noted over 60% of the discounted stuff in their outlet stores are now core products, like the classic black leggings.
Oof. That's not good for the brand image.
It's a very worrying trend. It risks diluting the brand if those iconic styles, the heart of their premium appeal, are constantly on sale. It just chips away at that aspirational value.
Okay, that paints a clear picture of some serious pressures. But you're suggesting this isn't the whole story. Is that farewell to leggings idea maybe a bit?
Well, what's fascinating here is that the article, while insightful, probably does overstate farewell to leggings. I mean, this isn't a funeral for athleisure.
Right. People still wear leggings.
Absolutely. Athleisure penetration is still remarkably high. It's more of a mixed shift within the category. And critically, Lululemon's store economics, still elite.
What do you mean by elite?
Sales per square foot were $1,574 in FY 2024. That's way ahead of many retailers. It signals a healthy underlying business, you know.
Okay, so they have the money to adjust.
Exactly. Strong cash flow gives them flexibility. They can adapt. They're introducing flares, looser studio cuts, softer fabrics. It's not about abandoning leggings. It's about rebalancing the assortment.
So the idea they can't adapt their product line is wrong. But what about marketing? The article says they spend less than rivals. If word of mouth isn't enough now, isn't that a fundamental issue?
That's a fair point. It's true. Historically, they've spent modestly on classic ads. But saying this marketing gap equals destiny, well, that feels too static.
Yeah, so.
Marketing strategies evolve, right? As that organic community buzz fades and U.S. brand heat maybe cools a bit, the smart move isn't giving up. It's a targeted brand reinvestment cycle, meaning focusing budget on, say, performance lines where they're strong, or doing smart fashion crossovers to get that buzz back. The critique of the past strategy is fair, but concluding they can't pivot, I don't think that holds. They have the resources.
Okay. It sounds like there might be something else, though. A bigger external factor the article mentions, but maybe doesn't stress enough. Something hitting their actual operations.
Absolutely. And you've hit on it. The tariff story is significantly bigger than the article suggests. And it really, really underplays the immediate impact of recent policy hits.
Go on.
The article mentions new duties, okay, but it critically underplays two huge recent shifts. First, the August 29th removal of the $800 de minimis exemption for direct-to-consumer imports.
Ah, the rule that lets small packages come in duty-free.
Exactly. That's gone for many shipments. This means higher effective prices, more logistics friction for brands shipping directly to U.S. customers, and a lot of analysis suggests Lululemon's online orders really benefited from that loophole, so it's a direct hit to e-commerce.
Wow, okay, that's big for an online-heavy brand. What's the second thing?
Second, actions in July added new U.S. tariffs on Vietnam. This is incredibly significant for Lululemon. Why? Because roughly 40% of their products are made there.
40%.
Yep. And on top of that, about 29–30% of their fabrics come from China, which also faces duties. The article touches on tariffs, yes, but it doesn't really connect the dots to the near-term markdown risk.
Meaning, if customers won't pay more.
Exactly. If price elasticity is tight, if shoppers are really sensitive to price hikes, Lululemon can't just pass these costs on easily. It forces them towards more discounts, even on core stuff, just to keep inventory moving. These aren't background noise. They're immediate cost and channel shocks.
So it's way more than just, are leggings still cool?
Yeah.
It's about where stuff is made, how it gets here, the actual cost, and how people are buying.
Precisely. Demand isn't just fashion preference. It's heavily influenced by the venue, the channel. We talked about store visits being softer.
Right.
Combine that with the macro caution among U.S. shoppers, and it really compounds the style shift challenge. The article focuses heavily on silhouettes, which, yes, are important, but it seriously underweights this channel friction the de minimis hit, the store visit softness, both pressure conversion and force more promotions.
Okay, so the baggy kill Lululemon story is way too simple.
Far too simple.
So what does this all mean for their future then? The immediate threats seem much more complex, much more operational and policy-driven.
Yeah, I think that's the key takeaway. The heavier immediate threats right now are these policy-driven cost and channel shocks. They're layered on top of a fashion cycle that, honestly, Lululemon absolutely can and probably will chase with tweaks.
It's about resilience then.
It's about adaptation and resilience in a much tougher operational environment. So for the next, say, 12–18 months, there are several key things we should really be watching.
Okay, like what? Beyond just making baggier pants.
Well, first, yes, the merchandise moves. Are they effectively bringing in those looser cuts, flares, straight legs, innovating with fabrics, but also are they showing tighter discipline with SKUs, like seasonal colors that might not sell, and are they doing smart selective collaborations to rebuild that buzz?
Makes sense. And what about holding the line on price with those tariff pressures?
That's the critical pricing power stress test. Can Lululemon actually hold its average price, the average unit retail after tariffs, and the de minimis change? And can they do it without resorting to constant sales that dilute the brand?
That's the tightrope.
It absolutely is. It's directly tied to their gross margins. Success there would show real brand strength.
What else should we track?
Also, watch the mix shift. How will their international growth, especially China, assuming luxury holds up there, okay, how will that balance the pressures in the Americas? And can they successfully grow menswear, outerwear, accessories.
Diversify away from just leggings.
Exactly. Move beyond that one product image, become a true lifestyle brand. That's crucial.
And that Costco lawsuit,
Yeah.
does that matter long term?
Yeah, I think the outcome of the Costco dupe case could be quite influential. It might signal how aggressively others feel they can copy Lululemon's designs.
Yeah.
So it has implications for their IP, their brand value, their ability to stay distinct.
This has been really fascinating. Just shows how a story that looks simple on the surface, fashion trends, actually hides all these layers. Trade, policy, consumer behavior.
Right. And if you connect it to the bigger picture, it makes you think, what really defines a brand's health? Is it just the latest sales figures or what's trendy? Or is it more about navigating this incredibly volatile global supply chain, adapting to policy changes you can't control?
Yeah.
What does Lululemon's experience tell us about how vulnerable even really strong brands are to these outside factors? And maybe, how should you, listening, assess a company's prospects when you see these kinds of diverse pressures piling up? It's not always just about the product itself.
Food for thought indeed.
Yeah.
Thanks for listening. Follow us for daily insights into world affairs, and don't forget to like, comment, and share.